So you're ready to go solar and you decide to finance instead of getting a PPA or buying it cash. Should you go with a nationwide lender? Some of these big nationwide lenders like Goodleap, Mosaic, Sunlight, some of these big ones? Or should you go with a credit union or even a HELOC? My name is Michael and I've been selling solar in California for 6 years, and I now run a company whose mission is to help educate people so they can go solar in the best way possible, the best thing for their home. And in this video, we're going to break down the differences between these nationwide lenders and a credit union. We won't talk too much about the HELOC in this one, but we want to talk about really the differences between these nationwide lenders, some of the advantages and disadvantages, who should go with which option versus a credit union, who should go with that option. We're going to look at an example side by side and how these loans compare to each other, so you can decide on which one really works best for you. Solar can be a really good option, but it's really important to make sure you're doing it in the right way and you're getting the best rate possible. Oftentimes there's shown one thing and it looks really good, but then it ends up in the long run it's not as good as you thought it was, or any number of other things. So I'm going to break this down and really dive into which option you should go with. So first, let's talk about the nationwide lenders. These are Goodleap, Mosaic, Dividend, Sunlight, Sungage. They're these massive solar loan providers. They're very good at it. They're very fast. They're very easy. Their processes are very smooth. They're oftentimes integrated into the installer's portal already, so it makes it very seamless. The installers already have them connected. They already have all of the rates and everything there for you. So it's very simple, very easy. And because of that easier process, they approve at a higher rate. So for example, if you were self-employed, you recently changed jobs, or you have an income that fluctuates, these loan providers are going to be much easier to get approval from because they oftentimes only look at your credit score. If your credit score is above 650, they oftentimes approve you. Versus when you're looking at a credit union, they need a lot more background check, and it could be more difficult, even though they may have better rates, to get approved with the credit union. There is one red flag though that installers won't tell you about, and it's called a dealer fee. Rarely will they tell you about the dealer fee. Basically, it's a 18 to 36% fee on top of the base cost for the solar, which is meant to downplay or downgrade the interest rate. For example, you might have a standard of an 8 or 9% interest rate with a normal loan, but then they'll tack on that 18 to 36% dealer fee, which basically takes that 8 to 9% loan down to maybe a 3% loan. So the loan might look like it's a really good interest rate, but you're really paying a lot more up front. So the guy's like, hey, you're not going to be able to find a 3.9% interest rate anywhere. You got to go with us. We got the best one, not knowing that they're actually charging you potentially 30% over what it is in the beginning just to give you that lower interest rate. It's like buying down your loan. You do it with mortgage rates all the time. This is similar to that, but the non-disclosure is, I feel like, a problem because it's not all bad. In some cases that can be good, and in some cases it ends up being around the same price as what the credit union would have. But there's a key downside. If you're wanting to pay off the loan early, if you're wanting to, for example, you have a 20-year loan and it has a 30% dealer fee on it. So maybe it goes from $30,000 to $39,000 because of a 30% dealer fee. Well, now, if you wanted to pay it off in 5 years, or you got a big chunk of change and you wanted to pay it off early, now you're paying more in total because of that upfront cost. Versus if you have that all in interest and you wanted to pay it off early, you're not going to pay as much in total because you don't have to pay the full interest when you pay it off early. So when you're looking at a loan, you got to think about, are you going to want to just pay for this and just like replace it with your utility bill and you don't worry about it? It's just something you're going to pay every month until it's done. Or do you want to pay it off early? Would you prefer to pay it off early? If you do, don't go with one of those options because it's going to cost you more to pay it off early. So I always tell people to make sure they look at the total, what their total cost is going to be with the loan, instead of just looking at the price of the system. That can be deceiving sometimes because there's a big interest charge. The interest triples sometimes what the actual cost of the system is. And sometimes don't just look at the low interest rate. Hey, I got a 3.9 here, I got a 4.9 there. I'll definitely go with the 3.9. Not necessarily. Make sure you're looking at the total price and what this is going to cost you over the 25 years or the 20 years or whatever term that you're looking at. I know it sounds pretty simple, but oftentimes these solar processes can go so quickly and you want to get this done and it's so complicated that you're just like, whatever, let's just do it. But this is the thing, this is 20-year deal that you're going to have the solar system. So, but making sure you do it right, making sure you're getting the best deal possible is going to pay dividends in the long run. All right, so now let's look at the credit unions. We're going to talk a little bit about the credit unions and then we're going to do a side-by-side comparison of these two so we can get a better idea. But first, Credit unions. We're going to look for a credit union that has an energy loan. You don't want to just go with a personal loan with the credit union. You want to make sure you get an energy loan. There are incentives that the state of California is giving to loan providers for energy solutions. And so the rates are going to be a little bit lower on an energy loan, energy specific loan, rather than just getting a personal loan with a credit union. So make sure you're looking for that. We have a few options. We like San Francisco Credit Union. They have an energy loan, and we like Energy Loan Network. Both of them do have a approved energy provider list or a approved installer list. So when you're looking through them, make sure your installer is on their approved list. That gives you the peace of mind as well that these people are also good companies, they're in good standing with these lenders, and they have a good track record where these lenders can trust them. The biggest difference to the credit unions is they oftentimes have better rates or more options than these bigger nationwide companies. For example, you're going to have no dealer fees with the credit unions. They're normally going to give you more competitive rates, and they have more options for the years and the terms. For example, we have like a 5, 8, 12, 10, 20-year loan options, where some of the other companies are only going to have like a 12, a 15, and a 20. So they have some more options. They have a lot more flexibility, I feel like, and they are slightly less expensive. All right, so let's compare these two loans. So I have just a basic loan calculator on here that basically I'm using to show the general rates that we're seeing right now. So over here with this $39,000, this is the loan with a nationwide solar loan provider, maybe Goodleap. They have, for example, a 30% dealer fee on their $30,000 solar system, which makes the total system $39,750 with a 20-year loan at a 3.99. Over here with the credit union, you just have the $30,000, you have a 20-year loan, and you have a 7.2. As you can see here, you're at 240 here and 236 here. It's not all that different as far as what you're going to pay monthly, but it's a massive difference if you're going to pay it off early. As you can see here, all of this is the total amount paid. The blue is the total amount paid for the loan, and then you have the interest in green. If you're wanting to pay this off early, you already have all of this sunken cost right here. If you want to pay this one off early, you have a lot less sunken cost, and you don't have to pay all this interest. So when I'm looking at this, that's going to be the biggest thing I'm going to look at and help the customer look at, making sure that they know, kind of have a plan of what they're going to do. Is this just going to be something they're going to keep paying, or is it something they want to pay off early? It's going to make a big difference on which loan they're going to want to go with, or any other situation that might make the, maybe the nationwide installer a little bit easier or a little bit better, because it's going to give a better approval rate. Long story short, make sure you're looking at the full terms of the loan. Make sure you're looking at all of the different options that go into it. Make sure you're not just taking the loan at 3.9% at face value, because sometimes this doesn't compare as close as it is now. For example, these are the best rates I could find, and one that would compare very closely. There are some that aren't this good. So for example, maybe this one's not this close to this one, or this one maybe even is a little bit higher than this one. So make sure you're looking at a few different options to make sure you're getting a good deal that you're going to be happy with for the long term. If you are interested in getting a quote, feel free to reach out. We'd be happy to get you that quote. We can break down a few of these options. We have multiple different credit unions, and we have multiple of the big ones as well as the PPA and obviously the cash option. So if you have any questions, you want me to review a proposal that you've received, no problem. You can send it over. I can review it, see if it makes sense, see if it looks like you're getting a good deal or not. I'd be happy to do that. And if you would like a quote, feel free to submit that into the email down below. Please like and subscribe. It tells YouTube that people are liking this educational content, and it pushes it out to more people. That helps the channel a ton. If you have any questions, put them in the comments down below. I'd be happy to answer them on a future video. And bye for now.